Let us look into the events on the financial markets that happened last week. A lot of tension between the United States and China, along with the COVID-19 developments in the world's largest economy and a possible second wave starting in Europe, were the main reason behind the greenback's weakness. The dollar posted its biggest weekly decline in almost 4 months against a basket of currencies and finished the week at the level of 94.43. On the weekly basis, it slid by minus 1.56%. The dollar Monday open price was 95.83. In afternoon trading, the dollar index hit its lowest rate since late September 2018. Thus, the index is on the pace for its 5th straight weekly decline. The U.S. unemployment benefits expire this week, and without those, millions of Americans would struggle. By contrast, the euro rose to its highest since early October 2018 after breaching the important $1.16 level on Wednesday. The European currency closed at 1.1656 versus the U.S. dollar. Thus, the weekly gain equaled 2%. For your consideration, the euro versus greenback pair started the week at 1.1446. Meanwhile, the euro was up for a 5th straight day versus the dollar, still soaring amid the European Recovery Fund improvement earlier this week. Turning to the pound, the weaker US dollar continues to be the pair driver, despite the UK data. Friday close price was 1.2791 when the pair pulled back modestly. Thus, Monday to Friday, the pair increased by 1.8%. We can assume that the pound is outperforming on the back of better than expected UK retail sales data. Also, the market participants ignored US data, new home sales and market PMI. What about Bitcoin? After several weeks of trading in narrow ranges, Bitcoin breached $10,000 on Sunday for the first time since early June. By the way, the recent news is that Bitcoin has been deemed as money under Washington, D.C. Money Transmitters Act. Thus, Bitcoin added 7.3% Monday to Sunday and was trading at $9,900 after a slight decline on Friday. Multiple analyses have shown that Bitcoin looks primed to see a macro rally despite the ongoing uncertainty and lack of volatility. Bitcoin has already lost a significant portion of its dominance against other altcoins. After trading sideways for such a long time, many coins are taking advantage of the situation to create massive rallies. Elsewhere, in commodities, oil prices rose on Friday, lifted by some supportive economic data, but tensions between the US and China limited gains. The Brent oil futures finished the session at $43.34 a barrel. The weekly growth was 0.5%. There is an expert opinion that oil prices could see a near-term correction if a recovery in fuel demand slows further, especially in the United States. The resurgent pandemic has darkened the U.S. economic outlook. Some states have reinstated restrictions, which should reduce fuel consumption. Tensions between the world's top 2 oil consumers further arose worries about fuel demand. At the same time, WTI crude moved along with the trend and added 1.25% weekly to hit the price of $41.29 on Friday evening. And now we're getting closer to gold market. Like oil, it also showed some gains on the weekly basis. Gold cost $1,897.50 an ounce on Friday. Weekly, it upsurged by 5%. Gold prices scored their best weekly gain in 3 months. Many expect the precious metal to continue its surge towards the never-before-seen level of $2,000 an ounce in the coming weeks. All this taken together makes us wonder if stagflation, a rare combination of sluggish growth and rising inflation that erodes the value of fixed income investments, could take hold of the developed world. You've watched the combined review of currency and commodity markets on InstaTV. Stay tuned.